FXPassion, broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember the three pillars. We are trying to build a strategy and or a system. We are trying to understand how risk management works, and we are trying to understand how the psychology part works inside our strategy, inside our system. And if this is your first time, everybody, we are in the intermediate module. Okay, if this is your first time, please go back to the Stohastic webinar page and on YouTube and watch the videos starting from lesson number 1 over and over and over again. Okay, and remember, 90% of traders lose money in the forex market worldwide, and the webinars are not investment or trading advice. The webinars are for the educational purposes only. And for homeworks and or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. Also remember, I have a 20 seconds delay on the chat. If you're going to write something in the chat, I have a 20 seconds delay. Okay. Now, Miguel, are you here? Hello, Miguel. You were asking me about how to delete. Well, I'm going to go on my mouse on the trend line, right click, and you have remove down here. Can you see, Miguel? You have remove. Right click on the trend line, it's just an example, and you have remove. And you can do this on the whatever, indicators, trend lines, text. Can you see, Miguel? If you want to remove. And there is another cool feature here. I'm going to remove the trend line. You can go here and undo what you just did. It's a cool feature here. The two arrows, undo a drawing, yes. Okay. Okay, everybody, trading Fibonacci number, the Fibonacci ratios, and the original Fibonacci today. And yesterday I did a mistake. Somebody was asking what happened to the GBP NZD, and we were analyzing the GBP CAD, right? So today, I don't know you, I hope we did some profits today. Until right now the market is retracing, so we entered here as planned. Okay, this trade is still open. Okay, so just you to see. Hello Annie, but not in a row as you do. Not in a row. Oh, I go with the left click with the mouse, Miguel, and there is a delete button on the, what's the name? On the touchpad. There is a delete button on the touchpad. Hello Silas. But if you go like this, it's okay, no problem. Okay, we are past the Forex trading week, everybody. Did anybody make any pips shorting GBP NZD? This was a trade from Friday. This was the entry from Friday. Thanks to, what's the name? MHB, I think. He found this trading opportunity. So, here was the shorting opportunity, but I didn't check on this pair. But we traded today. We were in here, out in here. Right? The market is reversing. But this market is going to give you multiple. If it's going to fall, it's going to give you multiple opportunities to enter the market, right? And remember, these webinars are not trading or investment advice. So let me see. This is the sideways channel, sideways here, right? So on the 2-hour chart, I think you are going to have what? 3 to 5 more entries until the market touches the lower band on the 2-hour time frame, right? 1 more, 2 more, 3 more, counter trend line break, sideways, 4, 3 to 5 opportunities on the 2-hour chart. Okay, Now let's go back to the lesson. Please take a screenshot of this. Okay, take a screenshot, or with your cell phone, whatever, take a screenshot of this picture. Fibonacci numbers and ratios in the market. Retracement numbers have a relationship with extension numbers. Today Euro GBP. So if the market retraces until the 618, 50, 382, then the extension is going to be the 1618. Okay, everybody, when you yes, take a photo or print screen. When you're done, type done please in the chat box so we can move further. Okay, take a photo, take a screenshot, whatever. Type in the chat done when you're done, or type OK so we can move further. So green goes to green, 618, 50, 382, the extension, and this is the Fibonacci in a downtrend. The property extension is the green, the 161.8, the extension. If the market is going to retrace until the, thank you Victor, if the market is going to retrace until the 21.4%, the extension is the 127, and if the market retraces until the 14%, the extension is the 118, the extension. George, are you here, George? George was asking yesterday how a C point can be a high or a low. Thank you, Annie. Thank you, Miguel. Thank you, Silas. And remember, the C is the highest point in Fibonacci in a downtrend. The C is the highest point, not necessarily a high. Between the A and the B, starting from the B on, before the market hits the appropriate extension. And the D must be a low. Now let's move on the other one. Now this is Fibonacci in an uptrend. Okay, so take a screenshot of this also. It's a different picture. The one before was Fibonacci in a downtrend. This is Fibonacci in an uptrend. We have the same ratios and the same relationships between retracements and extensions. Green goes to green, blue goes to blue, red goes to red. But you can color code differently if you want. This is my style, my Fibonacci, okay? You can do it yellow, pink, whatever, dark blue, black. And again, remember, the C is the lowest point, not necessarily a low, between the A and the B, starting from the B on, before the market hits the appropriate extension. Thank you, Miguel. And remember, the D must be a high in an uptrend or a low in a downtrend. Okay. One more and then we're going to check the live markets. Okay, one more picture, everybody. This one. This is from last year. It's from the Forex Trading for Beginners. Okay, take the screenshot of this picture and learn. Learn, try to remember. Okay, because today we are going to talk the original Fibonacci. The original Fibonacci, number one, we use the original Fibonacci to determine trend direction. Okay, number two, then we compare trend direction from the larger time frame to the lower time frame, and you can see the pictures below, the daily time frame and the 2 hour time frame. Number three, the last thing we need to identify is in what zone are the Fibonacci's on the larger time frame and the smaller time frame. We learned about the market wave, extension, retracement, extension. So the Fibonacci is going to do the same. You're going to have a rally or a dip, then you're going to have the retracement until to the C point, and then when the market breaks the counter trend line, when the market finds its C, it's going to start moving to extension again. And as a rule, for high probability trades, we should always enter in extensions and in the same direction, from the larger time frame to the smaller time frame. All other trades are low probability trades, if we are talking about the Fibonacci's, of course. Okay? How to use the 3 Fibonacci's? No, not yet, step by step. Things to remember: the higher time frame controls the smaller time frame. Number 2, the Fibonacci is stronger than the trend line, everybody. The Fibonacci is stronger than the trend line. Number 3, you want to buy or sell the C and take profit at the D. Number 4, we didn't learn yet. You find the C using the contrarian Fibonacci. We're going to learn the contrarian in the future lessons. And number 5, the market has found its C and the trend has shifted. The market broke the counter trend line break. The market has crowned. We're going to learn about the crown in the future lessons. And the best scenario is when you have everything. 5-1 plus 5-2 plus 5-3. Okay, everybody, you need to learn this if you're going to use the Fibonacci's. If you aren't going to use the Fibonacci's, no problem. But if you are going to learn the Fibonacci's, you need to learn the rules and remember the concepts, remember the rules. Okay? That being said, we're going to do a Fibonacci trading exercise, and we are going to open GBP NZD to our chart, right? To our chart, and we have identified a sideways channel so far. Okay? And of course we don't have the crystal ball, right? We don't have the crystal ball, but we are going to monitor this uptrend, and when the market is going to break this aggressive uptrend line, here is where we're going to start drawing our Fibonacci's. Okay, so wait a little bit more, there you go, a little bit more. Okay, so the market hit the sideways channel and we are waiting for the uptrend line break. Waiting, bam, there you go. Okay, now what is the A, everybody? What is the A? Passion, but you said yesterday the Fibonacci's don't work in a sideways channel. Great question. So if this is the daily channel, everybody, okay, if this is the daily channel, okay, and you have one swing inside the channel, or upswing or the downswing, for what matters, okay, then the answer is yes, Fibonacci's don't work inside the sideways channel. But we can work with the Fibonacci's on a smaller time frame, on a smaller scale. Okay, if I'm going to open GBP NZD on the weekly chart, okay, this is the weekly chart, and this is the upper band up in here, and this is the lower band, right? Fibonacci's don't work in here. Why is that? Because this is the, yes, let's go step by step, correct. Okay, so inside the sideways channel, right, there you go, this is the weekly chart, right? Now where is the first A? The A point is the first low. In this example is going to be the lowest low, is going to be here. What is the B? The B is the first high as soon as possible after the A. which is up in here. Fibonacci retracement tool. We're going to connect B to A, right? And if you want to help yourself, everybody, what we are doing, we can also use the horizontal lines. I'm going to do the black like this, transparency, there you go. Okay, so this is going to be the horizontal line for the A, and I'm going to put a horizontal line on the B. A to B. What is the C? The C is the lowest point inside the AB boundary, not necessarily a low, before the market hits the appropriate extension, right? So orange today. So this is our C in an uptrend. There you go, this is our C. And if red goes to red, everybody, where is our D extension? Well, the market went up until here, hit the projected D extension, but by rule the D extension must be a high. So our high is up here. And this is the first A, B, C, D swing on the weekly chart, on the GBP NZD. Okay, now what we're going to do, we're going to delete the Fibonacci, the first one, and we're going to move A goes to C. I just moved the horizontal line, and B goes up to D. I just move my B up to D, and I'm going to click Fibonacci retracement tool, and I'm going to connect the A to the B again. Okay, if you want, of course, you can keep track of the A, B, C, D, right? Now what is the C again? It's always the same. The C is the lowest point inside the AB boundary after the B, before the market hits the appropriate D extension. So orange line, A to B, B to C. The market didn't touch the blue, didn't touch the 21.4%, so it's still green, and green goes to green, right? I'm going to delete, there you go. And our D extension is up in here. Okay, this is the original Fibonacci, everybody, on the GBP NZD weekly chart. And as you can see, the market then went up running, sideways movement, and hit our D extension up in here. And this is our new D. What we're going to do, we're going to move the horizontal line, A goes to C, and you need to practice this, everybody. A goes to C, B, I'm going to move the horizontal line, B goes up here, B goes to D. And please watch these webinars over and over, okay, at least 2-3 times. Now I'm going to delete the previous Fibonacci, and I'm going to draw a new one. Fibonacci retracement tool, let's connect A to B, and we have the third Fibonacci this time, right? Now this is our C in here, and yes, I have another streaming platform, okay? And somebody said, why are we going to use the Fibonacci on the 2-hour chart? You said that the Fibonacci doesn't work inside the sideways channel. Hello MHB, we make some money thanks to you. You found a great rate. We make some money today. Hello boss. You are the boss. You found a great rate. Congratulations. So if I would trade the Fibonacci from the weekly chart, everybody, is not going to work, because the sideways movement is here. you cannot use the Fibonacci inside the sideways movement from the weekly time frame, okay, because there are no swings. That's the only reason. You need to see the swings, but the sideways movement is here, okay. So I'm in an up Fibonacci on the weekly chart, but I can trade the Fibonacci sequence if I want on the smaller time frame. Everybody, is it clear, this concept? Why we can trade the Fibonacci on the 2-hour time frame inside the sideways movement, and why we can't? It's not going to work from the weekly time frame, but from the smaller time frame, 1-hour chart, 2-hour chart, 15-minute chart, we can still use the Fibonacci. Why is that? Because we are going to see swings. We are going to see short-term trend. Okay? One more time. The Fibonaccis don't work inside the sideways channel. You need to see the market trending. Okay? So we cannot use the Fibonacci sequence on the weekly chart in here, GBP CAD, because there are no swings, right? What can I do? I can put a Fibonacci up in here, right? But can I trade the sideways movement? I can't, right? The chart is too big, okay? But we are going to trade the Fibonaccis inside the sideways channel on the smaller scale, 1-hour chart, 2-hour chart. Any questions? If you don't understand, please write in the chat, Passion, I don't understand, explain again. Okay, great. So we are going to jump from GBP NZD weekly chart to GBP NZD 2-hour chart. Okay, so I'm going to delete this. Okay, we have a trend line break from the weekly chart. We have a trend line break, as you can see. Okay, now what is the A? What we are going to measure? What is the A? Remember, from the higher time frame, which is sideways, we are going to see short-term trends on the smaller scale. So when the market hits the upper band, right, counter trend line break, when the market hits the upper band, we are going to reverse our Fibonaccis. So we are going to draw a down Fibonacci today. So what is the A? The A is the first high. Okay, so in this example it's not the absolute high. I hope George is watching this video. George was asking yesterday, oh, it's always the highest high? No, not always. And this is the example, but it is the first high. So this is our A. This is our A. Now, what is a B in a downtrend? The B is the first low as soon as possible after the A. So this is our B. Orange line. Let's make it like this. Okay, A to B. This is our B. There you go. So we have the A, we have the B. I'm going to draw the horizontal lines. Horizontal line on the A, horizontal line on the B, Fibonacci retracement tool, and I'm going to spread from B to the A, the Fibonacci retracement tool. Right? If you want, you can fix it on the right side. And let me see. Better like this. Okay. Now A to B, where is the C? In a down Fibonacci, a C is a highest point, not necessarily a high. inside the AB boundary after the B before the market hits the appropriate extension. So A to B, B to C, we are up in here. Tell me everybody, did the market hit the blue line? This is the Fibonacci and the chart. Where is our D extension? Is the green our D extension, or is the blue our D extension? So A to B, B to C. What is the C? The C is the highest point inside the AB boundary before the market hits the appropriate D extension. In the previous lesson, Fibonacci used to call the absolute A. Yes, but this is not the absolute A. The absolute A is on the monthly chart, maybe weekly chart. Green, yes sir, okay? So if this was the trade, everybody, and we are trying to build a strategy, we would wait for the counter trendline break. We would wait for the counter trendline break. Okay, we would put our stop loss 10 pips, 13 pips above the A. This is going to be our stop loss. Okay, there you go, stop loss up in here, and we would take the right until to the green. Okay, it's not the best risk reward, right? We would enter here after the closes, so this would be our risk somewhere up in here, and this would be our reward. It's not the best, but still okay. It's 1 for 1.5 or 1. We're going to risk 1 to get 1.2, 1.4. Silas blue, no sir, the market didn't touch the blue, Silas. Okay, I'm going to show you. The market didn't touch the blue. Let me see if I can. Can you see, Silas? The market didn't touch. In order to be a different color, the market need to touch. This is the wick here. The candlesticks wick, Silas, didn't touch the blue. Can you see? It must touch a different color in order to change the appropriate D extension. So Victor is right, it's still green. Okay, there you go. Everybody, if this is the first Fibonacci trade, tell me, is this a risky trade or it's not a risky trade? Technically speaking, is this a high risk trade or is a low risk trade? And there is no right or wrong. You can say, oh, this is a low risk trade because you have the Fibonacci's. You can say this is a high risk trade because of whatever. Not a high risk or not a low risk. I'm using the Fibonacci's and I'm using a counter trendline break. So, right? And we tried to build a strategy in the past week. Am I using candlestick formations? No, I'm not. So is this a high risk? 50%. Why? You are correct, Miguel. Why is this a 50%? Yes, sir, this is a high risk. Low risk trade. No, Annie, it's not. It's high risk. It's high risk trade. Remember everybody, we are upgrading your knowledge. We are trying to upgrade your knowledge. So the basic module was in here. This was the basic module. And we jumped from the basic to the intermediate module, which is in here. something like this. We started down here, and we are now what? Intermediate module. Okay, so you should have learned, what is this color? You should have learned these lower levels, everybody. Okay, that's why I'm telling you, if this is your first time with us, go back to the Ducascopy YouTube page and start to watch the webinar starting from lesson 1. Because it's not just the Fibonacci. The Fibonacci is an advanced tool. We have to go with our basics. Yes, MHB, what are the basics? No confirmed C, but we are not here. Miguel, we didn't learn the contrarian yet. But Fibonacci plus counters and improved probabilities. Not yet. Everybody, this is a high risk trade. Why is that? Why is this high risk? If you are going to jump in the market with the Fibonacci's all over the board, you are going to lose. You cannot just enter trades blindly. Yes, I identify the sideways channel, but why is this trade high risk? And this knowledge goes here in the basic module. Basic module. If you don't remember, you need to go back and watch the webinars starting from module number 1. This is basic stuff. Lower low have to break first. That's the answer, MHB. Congratulations to you. Everybody, I don't have a confirmed downtrend yet. I don't have 2 lower lows. I mean, I don't have 2 highs and 2 lows. Where and when the second low and the second high are a lower low and a lower high. Can you make small, please? Small like this? Like this? Everybody, this is beginner stuff. This is a high risk trade because I don't have resistance. No, resistance is okay. Resistance is in our favor, but I don't have a confirmed downtrend. I'm shorting, right? I don't have. This is what I'm missing. I'm missing the second lower low and I'm missing the second lower high to confirm the trend. So this trade is, it's still okay, but it's high risk. Okay. Nonetheless, we're going to short the market. There you go. We shorted the market, and let's see, the market was falling, right? The market was falling, moving up, sideways, right? There you go. And the market is still falling. So green goes to green and sideways, bam, the market hit the extension, right? Now me and MHB, we were sleeping, we didn't check, we didn't find this trading opportunity. Okay, so but as you can see, this Fibonacci sequence, he is right. Okay, so A to B, B to C, C to D. What is the D? The D must be a low. So, but it doesn't matter because orange, there you go, the market hit our take profit level, right? So we are going to wait for the market to establish a low. Let's wait, still falling, the market still falling, and looks like, there you go, we have found our D. A, B, C, D. This is the D down here. This is our new D down here. Why is that? Because the market hit the 1618 extension, but it didn't do a low. So the next low is the D. What we are going to do, we are going to delete our stop loss, delete the risk reward quadrants. I'm going to delete the Fibonacci, and I'm going to move the horizontal line. A goes to C, and I'm going to move my horizontal line. B goes to D. There you go. This is our B. This is our B. The C is going to be somewhere in here, and this is our A. A to B, right? Now, George and everybody else who is asking, how can a C be a lower or a higher point, but it's not a high or a low? Well, if this is a trading exercise, this is the C right now, and it's not a high. It's just a candle. Okay? Why is that? Well, what is the C? The C is the highest point inside the AB boundary after the B, before the market hits the appropriate extension. So A to B, B to C. This is our C right now. Can you see, everybody? When you are going to monitor the market, the C is a point. I don't know what is going to happen in the future, but the C is a point in this point in time. Okay? Now, I have a down Fibonacci, and I have a bearish candlestick formation. Should I enter or not, everybody? Should I sell the market? This is the live market. It's happening right now. GBP NZD 2-hour chart. Right? Now, good point, bad point. The good point is now I have a confirmed downtrend. So my technical risk just decreased. This is the good point. My technical risk just decreased. I have high, lower low, lower high, lower low. I have a confirmed downtrend. Okay? Should we sell right now? We have a bearish engulfing candle. Should we go short? What do you think, everybody? You can say yes, let's go short. You can say no, don't go short. You can say wait. You can say I don't know. What do you think? And remember, there is no right or wrong, but you are going to have these questions when you are alone at your office, at your home, right? You are going to trade, and this is going to happen. Should we sell or not? Yes, no, why not? Teacher MHB, why not? Teacher Silas, why should we wait? Why? Wait for retracement. Teacher Victor, but we have a bearish engulfing candle. Annie, I don't know. Great answer, Annie. Wait for retracement to finish. But what if the market is going to fall, Victor? It is already a retracement. We have 3 candles. It's a retracement still. And the market broke the counter trend line, the small one. Should we enter, everybody? MHB, why not? Silas, why wait? Teacher, I want to learn. Victor has explained, Teacher Victor has explained, he said, wait for a deeper retracement. Okay, I can understand this as a student. Okay. And Victor says, well, here is support, dear student. So wait for a deeper retracement. Wait for the market to retrace at past resistance. So I can understand Victor. But teacher MHB and teacher Silas, I want to learn from you also. Thank you, teacher Victor. We don't care if it fall, but we have to with our terms. Okay, what are the terms? What are the terms? Teacher Silas, come on. Why should we wait? Why should we wait? Everybody, I give you what? 10 more seconds. There is one more most important aspect of this trade not to enter right now. And again, this is beginner stuff, and we are in the advanced, intermediate module. Okay, all of you are right. Teacher Victor is right. Teacher Silas is right. Teacher Miguel, you are right. Even teacher N is right. But there is one aspect which is more important. Leader retracement. So what? Sell trend line and retracement. No. There is one more aspect, and it's more important. All of you are right, okay? All of you are right. All of you are correct. All of you are correct. Why is the Fibonacci a great tool? In my opinion. Because the Fibonacci tool is going to show you the relation between risk and reward, everybody. This is the answer. Okay, all of you are right, but this metric is most important, that every counter trend line, every small retracement, every support, every resistance. Okay, if I'm going to enter right now, what am I doing? My stop loss should go above the A. And if this is the Fibonacci, am I risking more than I'm making, or am I making more than I'm risking? Risk reward, yes sir. The risk reward ratio is the most important thing before you enter into a trade. Let's write this down. You aren't going to make it in this game, everybody. Risk reward is the most important, what's the name? Metric? Factor. It's the most important factor before we enter the trade. And the Fibonacci tool is a great tool. It's going to show you the risk reward ratio. Okay, so you could have in here Fibonacci is pointing down. You have a counter trend line break. You have the stochastic pointing down in the overbought zone. You have the MACD crossing the lines. You have the moving averages crossing the lines. You have the RSI pointing you to the oversold zone. You have the parabolic SAR telling you to short the market. And you have the Ichimoku and the Super Mega JP Morgan Chase system telling you to short. Okay? You shouldn't short in here. If, of course, you are going to use the Fibonacci's. We are talking about the Fibonacci's right now. Okay? If you are going to short in here, you are forming bad trading habits, everybody. And guess what the beginner trader do? The beginner trader gets greedy, enters the market short, and he wins, everybody. He wins. Okay? He wins. He got lucky. He won. Okay? And he starts to think, man, this Fibonacci is okay, but this risk reward ratio, it doesn't matter, right? Bad trading habits. You do this 5 to 10 times, you are done. Nobody's going to help you. Not even God, everybody. Why is that? Passion, you are joking. No, okay. No, I'm not joking. When you form a habit, it becomes subconscious, and you are going to enter this kind of trades, and without knowing it, it's subconscious behavior, everybody. And this is why we have 5-year traders, 7-year traders, 8-year traders without consistent success. Right? Man, I'm trying so hard to work and I'm trying to trade for 5, 6, 7 years and I still don't live from the market. I'm not making any consistent money. This is one of the reasons. Risk reward is the most important factor. I hope my English is okay here, I don't know. Before we enter the trade, and the Fibonacci tool is a great tool to measure risk and reward. But as I said, everybody, all of you were correct. Why not to enter, why to wait? Okay, so we are not entering in here. We are going to wait. Okay, wait, and the market is moving down, moving up. So what is the C? Well, we are going to monitor the market. This is the C right now. A, B, C is up in here. Why is that? Well, the C is the highest point inside the AB boundary after the B. Is not necessarily a high. It can be a high, but not necessary before the market hits the appropriate extension. So we are going to monitor the market. Wait, 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 right? Wait, wait in here, wait. We are going to draw a counter trend line on the candlesticks. Wait, wait, bam. Now this is a counter trend line break, right? So we can enter or here, we can enter here. This is where the candle closed, right? Or we can wait for another Fibonacci retracement. So what happened right now? Our risk reward just get worse, right? Because this is our risk and this is our reward. So we are risking more than before. Background color, okay. So we shouldn't enter in here. Passion, but the market is falling. It doesn't matter. It doesn't matter. Doesn't matter if it's falling or moving up or down. Risk reward is the most important metric, is the most important factor before we enter the trade. You are going to win once, okay. But you are going to win $1 and on the next trade you are going to lose 8. And then you are going to come to me and cry, oh, Passion, help me, right? But I told you, you are forming bad trading habits in here. And to be honest and fair to everybody, if you are going to use the Fibonacci's. Okay? I have students in here who rejected the Fibonacci's. They said, oh, I don't believe to the Fibonacci's, or simply I don't like the Fibonacci because of the risk reward. Say, okay, no problem. You can reject this knowledge. If you don't like the Fibonacci, go find another tool, right? Could be the Ichimoku, what else? The Bollinger Bands, whatever, if you don't like the Fibonacci. But I'm telling you, the Fibonacci is a great tool. Especially because it shows entries, it shows you profits, it shows you the stops. And my dog, the Fibo, is barking right now. Okay, everybody, now one more thing. Can we enter the market and put our stop loss above the C? The answer is yes and no. Okay? I'm going to put the stop loss above the C because of the risk reward, above the C. And this is a rule, everybody. Let's write this down. Rule: if you put your stop loss inside the AB boundary, you are increasing the chances of being stopped out by 80%. Okay, this is what we know about the Fibonacci. Don't ask me why. There is a statistic out there on the internet, okay, and this is a rule. If you put your stop loss inside the AB boundary, it doesn't matter where, okay. Oh, I have a deep retracement until the blue line, until the 21.4, I'm going to put my stop loss up in here. It doesn't matter. If you put your stop loss inside the AB boundary, it doesn't matter uptrend or downtrend, you are increasing the chances of being stopped out by 80%. Why 80%? I have no idea. This is the statistic from the researchers, but it's out there on the internet. You can check upon this. Okay, so can I do this? Yes, you can. Yes, you can. You can do this and improve your risk reward, but you are increasing your chances by being stopped out by 80%. And we learned this with the market wave, extension retracement. It's the same concept. Stop loss should go above the extension because the market can retrace further and it's not going to change its structure. It's the same concept. When the C is close to A, it doesn't matter if you put a stop loss inside the AB boundary, you are increasing your chances of being stopped out by 80%. And again, if this is your first time with us, everybody go back on Dukascopy YouTube channel and watch the course starting from lesson number 1. Okay? We have 3 more minutes. Let's see how it's going to play out. So risk reward, I'm going to delete. The market's moving sideways and bam, hit the extension and formed a new low. This is the new low, A, B, C, D, right? I'm going to delete this one, delete this one, delete. What we're going to do, always the same. I'm going to move my horizontal lines. A goes to C. There you go, A goes to C. And horizontal line, B goes to D. Question, passion, but we didn't make any money. That's true, but you didn't risk either, my friend. You didn't make any money, yes sir, but you didn't risk any money either. Professional traders manage their risk first before they go after the pips, everybody. So horizontal line, A to the B. Fibonacci retracement tool, and let's see what is happening. The market is moving sideways. Okay, this was a great trade, everybody. See? A, B, C, D, 1 more minute. C point, blue goes to blue, right? And this is where we shorted the market. This is where we entered short, I think. No, it's one later. Okay, I have, this is the stop loss. Let me see, but this is a great trade because of the risk reward. So this was the risk, blue goes to blue, and this is the reward, everybody. Risk reward. Okay, if you would trade the candlestick formations, come on, there you go. Or if you would sell here, next counter trendline break. Let me see, went up, and or you would short here the market on this counter trendline break, right? Still okay, not the best, but still okay. This is the risk, you would short the market in here, still okay. And let's see, the market is, bam, the market just hit our D extension in here. Okay everybody, our time is up. Don't worry if you don't understand. We're going to spend 2 months on the Fibonacci's. Rakesh is coming out on the stage next. Stay strong and learn. If you want to use the Fibonacci's, learn the concepts and everything. Stay strong and trade with passion. This is FXPassion signing off.